Hello everyone, this is today's video analysis for September 28th, 2018. Today we're looking at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. Well, we've had a significant turn of events over the past few days here for the dollar franc, while earlier this week, at the very beginning of the week, we were looking at it underneath the black trend line, underneath resistance, and potential for the trend to continue to go lower. Now, just a few days, we've seen a significant turnaround for this currency pair. US dollar has rallied a bit after the FOMC interest rate news on Wednesday. Actually, it took a day to come around, but yesterday we started seeing the US dollar rallying significantly and pressuring back higher now for the dollar franc. The question is this just a temporary move higher, a correction move higher, or are we now starting to see a shift in the trend? Well, without really knowing that for sure, we have to begin trading what the market is telling us. It's beginning to break and make new highs. It's breaking what was resistance, now becoming support. In fact, here on the daily time frame, if you take Fibonacci from the highest high on the chart way up here at the top down to the most recent low, the 0.382 Fibonacci retracement level, or 38% retracement, is at 97.43. That's the bottom of this yellow zone right in the middle of the chart, right below the current market. So in fact, the current market has pushed through not only the 382 Fibonacci retracement level, but what was resistance back here. So if you look at these two little black circles I've just drawn right here, you can see that the last time the market was underneath the yellow zone, it found resistance and went back down. Now, we can see that the market has gotten back above there and has the potential to continue to go higher. Let's zoom it in on this a little bit, and you can really see what I'm meaning by that. Above the 382, above this yellow zone, above those last resistance highs. So we have to go on what the market's telling us. Right now, it's not telling us that the trend is down. Right now, the momentum and sentiment is actually more bullish, and that's due to the fact that we've seen that rally on the US dollar in the past couple of days. So if we're going to trade in the direction of the current momentum, we're now looking at this yellow zone as our intraday support and becomes a potential opportunity to buy in the direction of the current momentum. Now there's risk here. What's the risk? The risk is the sellers come back and it turns back underneath the yellow shaded area. So we have a known risk. We know how we can protect ourselves if the market turns around and goes in the other direction. But we also want to be able to take advantage of the current direction that the market's going in. By the way, 618 fib of that same range, high to low on the chart, sits way up here at the 100 period moving average and the 98.65 or so level, the orange shaded area up here. So that's where the 618 is. So now that we're above the 382, potential that the market continues to go higher all the way up there to the 618 has started to increase. So let's consider that 4-hour time frame. As we get down here again, let me zoom out one time so you can see there's our last two highs over here on the left hand side, and we spoke about the reversal that happened over here where the black circles are yesterday in the live trade room. Now today, we see something different, don't we? We see the market above that yellow shaded area. So any dip back down to 97.60 or even into the 50s becomes an opportunity to go long in the direction of the current momentum. And the risk is pretty easy. We just don't want it to get underneath there. So I would say just underneath today's low. So the low is 97.37. So risk stop loss likely right around 97.35, 30, somewhere in there to protect yourself in case the market gets back underneath the yellow shade area. So buying into the yellow zone becomes an opportunity for us today on the continuation of the current momentum. The risk is it gets back under the yellow zone. We don't want to ride out any longs if it gets back under the yellow zone and starts to shift its direction again. So staying above the yellow zone, buying towards, at minimum, the pink zone, if not higher than that, if it continues to go higher. We'll look at those targets later in the trade room today. And of course, if it gets above the pink zone, we'll look for it to go higher. But right now, I just don't think selling would be a good idea for the dollar franc until or unless we see a shift in the trend again for the USD CHF today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.